Hi, everyone. Thank you for joining me again for another episode of the Optimize Wealth podcast. My name is Lance Norquist, investment advisor with Bellwether Wealth, and today we're focusing on how cash can be used strategically, not just as something sitting on the sidelines, but as a tool for flexibility, planning, and opportunity. Cash is having a moment right now, and for a lot of investors, it feels like the safest place to be, on the sidelines, waiting for clarity. But here's the problem with that thinking. Cash isn't just something you sit in. When used correctly, it's actually one of the most strategic tools in a portfolio. So today, I want to reframe how we think about cash, not as inactivity, but as intentional repositioning. First, cash is not always a market call. Holding cash doesn't mean you're predicting a crash. It doesn't mean you're bearish. It means you're aligning your money with your timeline. There are really two types of cash: operational cash and strategic cash. Operational cash is straightforward. It's emergency funds, near-term expenses, things that you know are coming. Strategic cash is different. That's going to be your flexibility, your buffer, your ability to make decisions on your timeline and not the markets. Because one of the biggest risks investors face is becoming a forced seller. Selling investments, not because you want to, but because you have to. Cash helps you eliminate that risk. It gives you control, and maybe more importantly, it helps you avoid bad decisions. Because when your short-term needs are covered, you're far more likely to stay disciplined with your long-term investments. Cash doesn't predict the future, it protects your process. The second big idea is liquidity. Liquidity creates optionality, and optionality is one of the most underappreciated advantages in investing. When you have cash, you have the ability to act. You can rebalance during market declines. You can take advantage of opportunities when assets are mispriced. You can move quickly when something compelling shows up. Because opportunities don't come with advance notice. They show up when things feel uncomfortable. When markets are volatile, when headlines are negative, and when people feel frozen in time. Liquidity allows you to move forward towards those moments instead of away from them. Now, people often talk about the opportunity cost of holding cash, and that's real. Cash may underperform in strong markets, but there's another side to that, the opportunity benefit of cash. It's the ability to deploy it when it matters most. And today, when cash actually earns something again, that optionality is no longer as expensive as it used to be. Liquidity doesn't just protect you, it positions you. Now let's be clear, cash is not risk-free. It just has different risks. Think of it as a trade-off between three things: safety, purchasing power, and the opportunity cost. Cash gives you stability, so no volatility, no drawdowns, but over time, inflation can quietly erode its value. That's purchasing power risk. Then there's opportunity cost. That's missing the long-term market growth. And there's also a behavioral risk. Sometimes investors hold cash and then never redeploy it. They wait for the perfect moment, which never comes. So the goal isn't to maximize cash, and it's not to minimize it either. It's to use it intentionally. Cash should have a job, not just a percentage. Here's a simple way to think about it. Use time horizons. Money you need in the next 1 to 2 years, that belongs in cash or cash equivalents. Money for the medium term, 3 to 5 years, can take on a little more risk, and long-term capital should be invested for growth. Then consider having an opportunity reserve, a defined portion of your portfolio set aside for flexibility, for rebalancing, for volatility, and for those opportunities we discussed. And finally, this matters more than people think. It's going to be your sleep at night factor. How much cash do you need to stay confidently invested elsewhere? Because if a little more cash helps you avoid panic selling, it's probably worth it. So here's the takeaway. Cash is not about sitting on the sidelines. It's about standing somewhere intentional. When used well, it gives you control, and it gives you flexibility, and it gives you the ability to act when others can't. In an uncertain environments, that's not just defensive, that's strategic. If you have any questions or would like to discuss how to use cash more strategically within your financial plan, please reach out by calling our office at 402-476-8844 or by visiting our website at bellwetherwealth.com. That's all for today's episode. Thank you for watching. Again, my name is Lance Norquist with Bellwether Wealth, and we'll see you next time on the Optimize Wealth Podcast.